Yes, the pharmacy giant, they were down 4% on their results. After the close, we'll have AVTR, that's Avantor, and Roku, and Avantor remains on the leaderboard. In addition to them, Etsy will also report. And that's all the news for now. Send it back to you.
Okay. Thank you, Dave. Now we turn our attention to the Nasdaq. Here's Thinkorswim from TD Ameritrade. Chris, can you go ahead and kick us off today? We had a successful test yesterday of the 21-day for the Nasdaq.
Yeah, exactly. That to me was the biggest feature of yesterday. Came down and then really, and most of that rebound happened in about 5 minutes, where it just the market shot up. I don't know if there was a headline at that point or something like that, but it's looking good. And the Nasdaq, which was down a little bit ahead of the market open, is now up a little bit, so that's good to see. I like that. You know, we've gone sideways for what, the last 6 or 8 days or so, and that's really allowed the 50-day to catch up. So we're no longer extended. Right. I'd love to see, you know, a few days of nice moves, and then we can make a lot of headway there.
Now, Arusha, how is your portfolio positioned at the current time? Are you fully invested? Are you still a little cautious, adding exposure? What are you doing this week?
Well, I'm around like 80% invested, and I've tried to increase it to 90% and backed off when some of the stocks have come in. I'm definitely bullish. It's just a choppy type of bullish, right? Where it's these stocks will look great for a couple of days and then they'll come in really hard, test things. But we've seen a number of stocks build bases. We've seen a number of breakouts out of more of our kind of stocks, and we're seeing some of them, especially the ones that had the powerful breakouts, doing really well. And they gave you just a few minutes, it seems like, to get into them when the train was leaving, and they're gone. You know, and so now they're super extended. So that gives me hope there. We might have, you know, sometimes August can be a little tricky, maybe not as tricky as July. But so we may have a little bit more chop and stuff like that. But overall, you want to do everything you can to not do anything during most of the trading day. You know, if you have positions, you want to try to let them test or come in a little bit and see if they can rebound, because it's amazing at how terrible some of these stocks can look in the morning and how bad the market can look in the morning. And as Chris said, within 5 minutes, so these indexes just make these insane rebounds. So yeah, so yesterday when the markets were coming in, I was in the office and distracting myself with everything but the market, you know, doing work and talking to everybody and stuff like that. And so that I think that helps. And then by the end of the day, I come in and look at it as, okay, things are still acting okay. Look at weekly charts, but don't watch this market too closely, especially once you get into the positions. Give them a chance to work and truly get stopped out of some of these things, and don't get scared out. I mean, or get shaken out too much, because these markets, they continue to be very, very resilient.
Mm-hmm. Okay, well, speaking of maybe only having a small window to get in on some of these stocks before they get extended, with that in mind, let's take a look at Horizon Therapeutics, HZNP, and I'm going to go on over to a 5-minute chart here, Chris. So give us your analysis in the early going for this earnings gap.
Can you zoom in
Yes.
a little bit? There you go.
There we go.
Okay, so that first bar looks pretty good. It's just, you know, almost ideal. Usually we like a little, maybe not so not such a long tail on top, but it's very symmetrical. So if you're, you know, raring to get into the stock, I would put an alert at the high and see if it can take that out. I guess for me, the issue is I've had a lot of trouble with this stock ever since there was a really nice move, I think, in the end of 2019. And since then, it's, shaken us out a number of times. Can we take a look at the chart on MarketSmith?
Yes, we certainly can. So here we go. Here's the daily chart on MarketSmith.
Yeah.
You want to look at the weekly or daily? Good.
Let's start with the weekly. So, from I guess it was maybe in the last half of, actually, no, I think it really was in 2019 when I first got into it, and then maybe got a piece of it in 2020. If there hadn't been earnings coming up, if we can go back to the daily, I wouldn't have sold it. It was just that it was, had this big move on volume that day, and then kind of went back and forth, and it's like, well, I just don't feel like I'm going to get any cushion before earnings, so I sold it. And now it's up, wow, it's up 10%. It was only up 6% a few minutes ago. So yeah, I mean, it still has kind of the feel of a breakaway gap. Was it LinkedIn that was like that, David, years ago, where it kind of broke out and then was hanging around, and then earnings came on and it really went on a move. So
that's one.
I mean,
of them,
these moves can move. I mean, these setups this way.
Celgene was also kind of like that early 2019. Yeah.
Okay, well, we'll keep an eye on it. So basically, Chris, would you add this back to your portfolio if it takes out that first 5-minute bar, the high of the first 5-minute bar?
I probably should, but I don't know.
Now you're getting cold feet. Is it because
because I just had
it was up 6%, now it's up 10%?
Yeah, because I had it like around 99, a week ago, and it just seems like.
Well, now you're supposed to buy more of it, right?
I know.
Chris should buy more.
If you can use the low. Yeah, I mean, you can use the low of the earnings day, or I mean, really right now you could use the low, I think. But we are in an environment where there have been a number of earnings gaps that have held and moved up higher. So if this one is going to work, this is the time, and this is the environment where it should work. And I think it probably will work, because there's no way I ever want to try this stock again. Yeah, because it is so choppy. It's shaken me out so many times. And there are times where you have some of these companies that they do this, they keep shaking out and wearing out everyone, and then finally they come through with the earnings report that truly satisfies Wall Street, and then they take off, and then everyone who got shaken out never got back in. They're like, why did I try it that one last time? It finally worked. But so I wouldn't be surprised that this would actually work here. But yeah, so if you had a position, you definitely could add to it. Just manage your risk, though.
And if this was a new position, would you be going with a half position here to start, or
less than that?
Less than that.
Yeah, and so this is for the earnings gaps that I really want to try. They have to be just in what I consider are the elite stocks. I mean, Horizon Therapeutic, I mean, they have a lot of really good numbers and they're doing some amazing stuff. It's just, for me personally, it's just hard for me to develop conviction in this stock, or even a lot of trust in a lot of biotech stocks. So I have an actual bias of having having a lot of conviction in biotech stocks. So with this one, for me personally, it wouldn't necessarily be, but for those who are really good at biotechs and understand it and understand why Horizon Therapeutic, this one might be one of their elite stocks, right? So I wouldn't take the chance here, and I don't take the chance on an earnings gap for most stocks, but for some, I will take a shot, because I mean, if you pull up like a Chipotle, and we talked about the Chipotle, maybe it was a couple of weeks ago when I was on. And it gave you that chance in the morning. It gave you like 5 minutes to get somewhere near that cup pivot right